All right, ladies and gentlemen, I want to welcome you guys to our Traders in Trading session number 3. And what we're going to do in this session is before I move into the things that I talked about, we were going to talk about this week, which we still will. What I want to do is I want to make sure that we're caught up. I want to make sure that we've covered sessions 1 and 2 and that everyone is clear, A, on being able to identify supply and demand and those big candles and drawing up the chart. And then number 2, I want to make sure that you're able to identify your ideal entry points. Okay. So what I want to do is let's start with Willie for a second, because you've gone in and you've done a lot of the charts and things like that. So I want you, and we'll do a few other of you guys too. Okay. I'm just starting with Willie because Willie don't mess around. Willie get his stuff up in there, and Willie have 3 kids, his wife, all this stuff. He working 8 to 5. You guys understand? Like, some people just want it better than others. You understand? Some people will make an excuse that my kids, my job. And you guys might like, Willie, that's like getting all the homework assignments done. He's up, he's on the session, he worked all day, I'm assuming, and it's right here. And it's someone like Willie this is why I do this. Because there's somebody who really, really, really wants it that can get it if given the right platform, right? But there's others who claim and won't do it no matter what, right? So what I'm just saying, I recognize your hustle in the whole thing, right? And I appreciate your commitment to it, and I'm glad to see that you are making some leeway. So that's why I want to start with you first so that we can get you squared away. So if you want to share your screen, I want you to go ahead and pull up any chart that you want, and I want you to clear the chart off, and I want you to walk us through your process that we went over in reference to marking up the chart, identifying supply and demand, and then entry points. I want you to take us all the way through that. Can you do that for us, Willie?
All right, yeah, give me a second. I wasn't expecting that.
Yes, I know.
Well, right now, I'm actually, hold on. New York City.
You want us to come back to you?
No, I'm right here. You see me?
Yeah.
I don't know if you see. Oh, okay. So right now I'm on USD CAD.
Okay.
First thing I did.
Share your screen for us.
Am I sharing my screen? Okay.
No, I said
I'm not technical like that, so guide me. How am I not sharing my screen now? I don't know if I'm sharing my screen.
Okay, so what you want to do is go back to the Zoom platform itself where you can see all of us, and go down to the bottom where it says share screen.
Okay, hold on. Oh, share screen. Host disabled. All right.
And then choose your trading view, and then hit share.
Did I do it?
Looks like it's trying to. I'm not sure.
Yeah, I don't know. Okay, share screen.
Yep, hit share screen. Then
it says host disabled participant screen sharing.
Oh, I disabled it. Hold on. You're right. Hold on. Okay. Go for it now.
All right. Yeah, I got it?
Yep. Okay.
Yep. Okay. So I went from the daily, of course.
Wait a minute. Hold on.
It's not showing
it yet. It's not. There it is. Okay.
You got it?
A little blurry, so give it a second. There we go. It's still a little blurry, but
I'm not as technical, so
it's fine.
I really don't know what else to do.
Okay, it's fine. I want you to clear all that off, and I want you to redraw it. Oh yeah. Oh yeah, Willie. Let's see how good you really are.
All right. Let's see what's going on.
Oh yeah, Willie.
First thing I did, you go to the top of the charts. You know, I go from where price is at. I look for where price is at, then I start looking left. I see where the top of the chart is at. To me, this is the top of the chart, but it's kind of all the way back down, you know, last year. So I'm not really kind of worried about that. Not per se, but not right now. So to me, my top of the chart is right here. So that's my first horizontal line that I put. On my daily, I keep them. Oh, that's not the horizontal line. Excuse me. On my daily, I make it magenta or purple, just because I can see it better. My eyes, I wear glasses, but I don't wear them, so excuse me. Y'all hear me? I just want to make sure I'm not talking to myself.
Yeah, we hear you.
Oh, okay. Grab the top one, then I go to the bottom, of course, go to the bottom one. To me, this would be my double zone because it's kind of close together, close by. So I will put one there. That's how I feel. I look left. I can see it actually hit. It has one touch across, another touch. I can come back all the way over here. I like it as a good demand zone because all of this space in between. So, and then here's a big bullish candle. So I start from here with my demand zone right here, right? I start with this one. This is my first one I started with. And I put my rectangle here. I mean, you could jump in and make sure I'm doing this right.
No, yes, good. So just explain. So you said, well, you did say your bullish, your big candle. What does that mean? What does that bullish candle mean?
That's my demand zone. Right here.
But why is it the demand zone?
Because that's the big banks making the market move. So that's how I take it.
Yep, got you.
So I extend it out, of course. My thing is, sometimes I don't know if I should extend it all the way out, because then my problem, even though my charts, I think I got it a little bit. I think I have too many lines on my charts. So sometimes that, that makes me second guess myself. But that's basically it. I keep my demand zone. I try to make my demand zone go all the way to at least the third, a good spot that it touches again previously. So I'll drag it all the way over here. Just to show that it's a good demand zone. Then go to my supply zone, do the same thing. The big bearish candle going down, as you can see. So that start right there. Look left. It's touching a whole bunch of space in between. So I grab my other rectangle again, like I said, make it red. Try to cover the body of the previous candle. Drag it all the way out. Somehow make sure it's touching. I like that. So that's my daily supply and demand zone. Now I start my support and resistance.
Okay, hold on one second. Hold on, Willie. Okay, so everybody that's watching that kind of went through this process on session 1, does everybody understand what he's done at this point? These are the basic parameters of it all, right? If you don't understand what he just did, then you're gonna miss why we're doing everything else that we're doing. Okay, is there anyone who does not understand what Willie just did and what he meant as he was doing what he was doing, as he explained it? Any questions? Okay, looks like we're good. Everybody understands. Keep going, Willie.
All right. Now I start my support and resistance between the demand zones on the daily chart. I do this way, I do daily. Then I go to 4 hour. I do a different color, and I like trying to get my entry. One thing I did hear Oren Wright and a few other people said they trade off the 2 hour. So I made a couple of dollars on my demo account off the 2 hour. So I kind of like that with my entry points. So just a little overall. Grab my horizontal lines. Just start plugging away. I like to look at, like a little teak. I don't know. I've been listening to IML and everybody talk about these little teacup things. So I like to put my support and resistance when they go up and then come down, make a U a little bit. So I try to find those. There we go again, and make it touch. So I try to look for those because that's where that's where all the action is at. So I just keep plugging those away as I see it. Here it goes
one other thing.
again.
Just in case someone doesn't understand where the support and resistance lines could go, what's another way that they could see the support? Okay.
I actually do. Thank you for reminding me. I actually do it on the line chart, which is a lot easier to find the bends in the market, right? That's what we were looking for. The bends in the market. So I just go. And even though in this case nobody knows, even though they close together a little bit, this is the daily chart, which is a few pips away from when you scroll down. Another one. Good. And that's the price of that. People walking. That's as far as I could put another one right here. Yeah, I'll put another one. So that's my basic support and resistance lines on my daily. I go back to my candle charts. It kind of plays out that way. That's kind of good. I could put a little. See, that's where I get confused. I don't want to put a lot of lines, but they kind of help the support and resistance. So I just plug them away. Then I go down to my 4 hour and zoom in a little more. Actually, I'm sorry. We said do trend lines on the daily. I went back, so just in case anybody missed it. I go to my trend line. Use the ray. I could grab it from this big bullish candle, but I mean, this to me, this is the move because it never came all the way back down. So I'll start right here. 1, 2, run it through. That's my daily markup chart right there. I'm mad I didn't get to save everything I did. Oh.
So, well, let me ask you this: Why are you starting right there with your trend line?
Because that's where, as you can see, this to me, this is a big bullish engulfing candle, as it is engulfing the previous candle, and the market never came all the way back down. It kept made higher highs to me, so that's why I started from here and moved it up.
Okay, why wouldn't you start down where your demand zone started?
I could. I mean, I could. This is where price was. I mean, it's to your discretion. So I could go like that if I wanted to. I probably did it my last one. I'm just, you got me on the spot right now, so I'm doing everything in front of 1,000 people. So I could start it right there because that's also the big bullish move, and it still keep making higher highs. So I can leave it right there. Thank you.
I'm just pointing out the fact that you can draw the trend lines in different places because the trend will kind of adjust, right? So I just want everybody to see, like on the daily chart, though, that's like the real daily trend, the way you have it right now, right? Now, the price, as it started to move up, it wasn't coming down and touching that trend line, but that plays into when our next touch is going to come there. Right? It plays into that. So the fact that price has moved, but it's only come down and hit that trend line once says something.
Correct.
Right?
Yep.
It says something. So you could still draw the trend up there, but let's not miss out on our opportunities, potential opportunities, if we start at our demand zone and count our touches from there.
Technically, that would be the second touch when it comes down to that trend line, which is a good entry point from the last class that I learned. Right?
There you go. Okay, got it. So, so UCAD right now is in what kind of trend?
Uptrend.
It's in an uptrend, and based on what you have drawn right now, Would you enter this trade right now? Would you not enter this trade, and why or why not?
I actually did enter the trade. I didn't enter a trade. Yes, I did. I did a market execution because I marked this up earlier. So when I went down to the 2 hour and with my call levels, it hit my level that I wanted it to hit. So I knew it was going down. This is as you go down 4 hour, 2 hour, you can see here we go again. I mean, even though it's about to be consolidating, I would kind of box this up and wait for the breakout. But I see this big bearish candle. Again, it didn't hit the trend line. To me, I'm looking for that second touch on the trend line. Those are my little things that I'm looking at.
So you entered this trade where?
I entered it. Let me get my phone. I can tell you right now.
Or not to the price, but just show me the area on the chart where you entered. Oh, you just got to look at your numbers. Okay.
1-3. That's all I was just looking at. 13134 something. So I entered 131,341. Somewhere around here.
So around that support resistance line, that support line?
Yeah, correct.
Okay, and why did you enter around that support line?
Well, when I entered this candle, this second candle right here, it was actually below. I should have waited for it to finish, but then my call level went off because I would have actually preferred it to close below this support line, but that's me still learning and not being patient.
Okay, so what's the rule of thumb?
No retest, no entry.
Correct.
Right. So I'm actually negative $2.
Okay. Okay. So the thing. So if you could have looked at this and analyzed it, where would you really prefer to get in at?
Below the support and resistance. Like I wanted this candle to close below the support and resistance. And then I would have entered it right there. I wouldn't have had a problem entering below this support and resistance line.
So if the candle had a close below,
right, I would have felt a little better. Right,
because that is what we need to happen, and we needed to retest that line first.
Correct. Yeah, I had before I erased it, I had my arrows go down, come up, and then go down.
Right, because what this could still do is turn around and go up.
Exactly.
Right, it could turn around and go up because it hasn't really given us any confirmation that it's going below that line. Right. I mean, even if we look at where it crossed over to the left a little bit, where it kind of made that arc and came up, if you can do your mouse, kind of go left, left, right there, right there. See, it came up, it crossed that line, right? Okay, then it came up, it came down, it retested once.
Right.
Right. Well, over to the right. Right there.
Right. See it. I would have loved it to be just like that.
Exactly. Right. So it came down, but it touched the line. Right.
Correct.
It touched the line. Okay. Then you would have got it in a buy though. Why? Because we're in an uptrend. Right. You're looking for buy opportunities in an uptrend. You're looking for sell opportunities in a downtrend. Not that you can't take sales in an uptrend. It's just that you don't know. It's going to make its power moves in the upward direction because it's an upward trend. As you can see, all the upward moves, are pretty strong, right? They have a couple of strong downward move ones too. But for every downward move it makes a really, really strong upward move, right? So it comes up, it crosses over that support line on the top, it turns around, comes back down, boom, hits that line once, right? Right there. That would be a great entry point, right? For a buy. You buy up to where? If you were going to buy right there, where would you buy up to?
At the next support line.
Right, you can do the next support line, yep. And or the previous level of resistance, which is, or consolidation. So if you look right there to that left, that up, right there, but up, there you go. Right in there. Yep. You see right up to the top of those candles?
Yeah.
That's the top of the consolidation, right? So there you would put your take profit there. Now, if you had to put your take profit at the exact resistance line, you would have got up there and it wouldn't have hit take profit. You see that?
Yeah.
And then it would have drug you all the way back down, right? You'd be sitting on your knees all day, or sitting on your hands all day at work, turn around, came all the way up, still didn't get it. Came back, pulled you back down all the way again. Then it would have came up and it would have hit it, right? Yep. That's a long time if you just put it at the support, if you just put it at the line versus the previous level of consolidation.
Okay.
You see what I'm saying?
Yeah.
Okay. So fine. So you get on that first touch. Okay. Boom. It goes up. It comes back down.
Yeah.
Right. And it does that craziness right there. Right. Yeah. And then I would just be sitting on my hands after that. Right.
Yeah.
Like, I don't know what this thing is doing. Not really. Right. So you could do some measured moves, which we'll talk a little bit about later on. But ultimately, right now, for the simplicity of the strategy, everybody should be looking for the easy setups, right? The easy setups. You don't have to make it hard. You don't have to take a hard trade. If you don't see what's going on, you ain't got to get in it, right? Now, if you are going to do that sale that you're in right now, Willie, remember we talked about last class, right? When you see a big candle like that, what usually is going to happen? It's going to pull back how far?
50%.
Right. So if you're in a sale right now,
it's no matter what, it's going to go up 50%.
Around there, right? You're going to get drawn backwards all that time, right? Why? Because you have to wait for the pullback. You don't chase it, right? That's the key. You can't chase it. You see that big long candle, you're like, oh my God, let me get in. And that's what we're saying. That's what the banks are doing to the average person. Psychologically, we see those big candles and then we get in. And what does it do? It pulls us back, right? So yes. Even if you had to just wait and say, okay, I see this big candle, and then you would have went and put in a sale limit at 50%. Do you see what I'm saying? You would have done better waiting for price to come to you.
You know, but my confusion was it's at a support and resistance line because you mentioned don't trade in the middle of a zone. So even though we're in the middle, regardless, we're in the middle of demand and supply zone. I'm in the middle of the support and resistance. If I put a sell limit 50%,
it doesn't matter. It doesn't matter. It's in the middle like that. You got to look at the fact that big. This is a 4-hour chart. Go to the daily chart. And zoom out for me. Yeah, so I can see closer into that area. See that big behind candle, Willie?
Yeah.
That's an engulfing candle. Yeah.
Right.
That's an engulfing candle. So what does that mean? That means that we're talking about this is the making of another supply zone.
Right. That's why I put a sell.
Yeah, but you don't put a sell there. You put a sell at the pullback.
Gotcha.
You don't chase the trade. Exactly. You can't wait to the bottom of the candle and then sell. Why? Because it's pullback time.
All right. I have one question for you. Well, it's not a question. Now, you told me we're looking for, again, the map. We're looking from the big picture all the way down to the borough where you live at, right?
Mm-hmm.
But from the 5-minute time frame on, that's what makes up the daily.
Yeah.
That's where I understand. I understand. Never mind. Don't worry about it. That's too long. I'll figure it out.
Yeah, I don't know what else to say at this point, Willie. It's just
don't worry about it.
If I go down to the 5-minute, all I'm looking to do is figure out when the pullback. I can see the pullback closer. It's hard for me to see the pullback right there. That's why on the daily, all you're going to do is find the 50%, Willie, and put in a sale limit. Put the line there on your chart. This is where I'm going to get in. Then you're going to go down to the 5 minute. And if you want to, watch price as it creeps itself up to your point. That's all you're doing is watching it actually get there. But that's still where it's going to be. It's going to be there on the 5 minutes, it's going to be there on the daily, but the daily is giving you the overall picture so that you know that your 50% line is actually a legitimate 50% line. If you try to do a 50% line on a 5 minute chart because you saw a real large candle, that large candle on the 5 minute chart does not reflect the banks coming in pushing price.
So like this right here, and see this is a big then 50% sell limit, and then it will take you down.
Correct.
Okay.
So you wait, like even at the top where they had that big engulfing candle before, that first one, yeah, it didn't come back right away, did it?
No.
But if you had to put a 50, wait, go back, where you going, where you going?
Oh, I'm sorry.
Everybody see, put a vertical line on that candle we're talking about so everybody can see. Does everybody see the candle we're talking about? Hold on, in case they don't. To the left.
This.
To the left. Yeah. That first one. Yeah, that one.
All right. Hold on.
Not that one. One over.
Not that one. One more.
One over to the left. Yeah.
That one.
Yeah.
Okay.
Okay. Why are we doing it on that one? Because that one is the engulfing candle. Right? Everybody see that? That's an engulfing candle. And that's where Willie has his supply zone marked up. Does he not? Y'all see that? Okay, now it's hard for me. Okay, exactly. It just cleared up for me. So he's got the supply zone right there. So what does that mean? That means that you look at that engulfing candle, and Willie, if you didn't see no other price, there's nothing else happening yet. You just saw that engulfing candle and it closed, right? It closed. And you go in and I say to you, put in a sale limit at 50%. Go get you a horizontal line, Willie, and gauge where 50% is of that candle. Or get a fib and draw it from the top of that candle to the bottom of that candle and get me 50%. Do that for me now.
You said this candle, right?
Yep.
Okay. Now that's my problem with fibs. How are you supposed to see this little bunched up stuff like that?
Well, I don't know how those fibs, I don't know what that is. I don't use that, delete that.
Okay. New, bro. Actually, let me do this.
Thank you, baby. Yes. Okay, can you delete that, really?
Yeah, I'm trying. I'm doing that right now.
Okay.
50%. For me, this is 50. See my crosshairs? I'll put a horizontal line.
Okay, let's put a horizontal line.
A lot easier.
Thank you. Now, if you just did that, do you see how after a little while it came back to the 50% line at some point? You see that?
Yeah, right here.
Exactly. Let price come to you.
Gosh, all right. I understand now.
It might not have come back right away. It don't have to come back right away. At some point, that pullback is going to come and enter and make itself come alive. You just put the sell limit right there. Just put it there. Once that candle closes, that big engulfing candle, once it closes, go ahead and put your sell limit at the 50% and just wait.
I'm sorry to cut you. So this is the engulfing candle? No, not really. To me, because it's like even. So I wouldn't call that an engulfing.
Well, engulfing only means, well, it's not even because the big body of the
wick.
No, the body of the bear candle, the whole body of the bull candle can fit inside the body of the bear candle, right?
That's basically a definition of an engulfing candle?
Yes, that's all engulfing candle is that, okay, Willie, is your wife shorter than you?
Yeah.
Okay, then you are an engulfing candle with her. What? Her body can fit, your body can engulf her whole body.
You come up with the easiest definitions. I mean, people will try their best to describe it. All you gotta do is say if the candle can fit in the other candles in an engulfing candle.
Correct. The whole body of the candle has to fit.
The whole, not even the wick, just the body.
Correct.
Okay. So then that's an engulfing candle. All right. I mean, yeah, thank you again. Thank you.
You're welcome. Right? So it's an engulfing candle. So if it's an engulfing candle, then there we go. What I would do, even at that point where it is right now, Willie, instead of trying to chase that sale, what would you do right now, Willie?
Put a sell limit 50%.
There you go. And go on with your life. Now, if you want to go look at it on the hourly chart and see how many hours it's going to take for it to actually hit your point, then knock yourself out. But you have to identify where 50% is on the daily first, because that's the true indication of where the 50% is.
Okay. Oh, all
now
right.
You're going to watch your trade actually start making its move from there, but you mark it up. So you got 50%. Okay, boom. So yeah, you can put the 50%. So you put 50% top of the wick, bottom of the wick, find 50%.
Right. Okay.
So you can gauge it with your eye. If you can get the fibs. I use the fibs over to the left.
I can't do them fibs right now.
Okay, whatever.
I'm better looking at this and changing a different color. If y'all can see that, let me change it a different color. That's better for y'all?
That's fine.
All right. And then we go down to the 4 hour and find that. Okay.
Yeah, now you see how it's coming up there?
Yeah.
So now you have a sale limit right there, and all you're doing on the 4 hour is waiting for the price to get there. That's it.
Gotcha. All right.
You see what I'm saying? That's it. It ain't that hard. You put the sale. Don't chase the money. You know the rule now, 50% of that big engulfing candle, and then it comes to you. You see how on the 4 hour, it's not an engulfing candle? It's not engulfing. Is it bigger? Yes, but is it engulfing? No. That's why you need to go and really look at your daily, because your daily gives you the more solid confirmation of what's going on. And then you use the lower time frames to just kind of monitor and actually enter the trade.
Yeah, I see people enter on the 15 minute. I don't really understand. Like I said, I'm doing because everything you read and they teach, they say, for new people you should look at the daily and enter between the 4 hour and 1 hour.
Right, that's fine. That's what you are doing. You set that sale limit. Go down to the 1 hour, Willie.
There you go.
Okay.
And now you just wait for it to
correct. Do you see where your entry point is in relation to where price is right now?
Yes.
That's it. Now, if you wanted to play the game a little bit, right? And I'm not suggesting everybody do this, because you gotta be a little bit smart about what's going on. But if you are expecting the price to go up to your line of your sale limit, right? If you're expecting that, then what would happen is it would make sense that you could buy up to that point.
Oh, okay. I see what you're talking about. I got you.
If you believe price is coming up to 50% and you're going to sell at that point, then obviously price would need to at least get up to that line. So if anything, you could decide at some point that you wanted to enter a buy up to that line and then take profit at that line. And then now your sale limit is set to ride you back down for the big wave.
So that's 2 entry points. That's I got you. Thank you.
You see what I'm saying?
Yes. Yes, I actually do.
You're like, yeah, I actually do. That's amazing.
Thank you.
Okay. So now the key though, you got to be careful. You got to be careful entering in going up though, right? Because you don't always know how it's going to move. So now that you've got where you would actually sell, now you got to do analysis on whether you're actually going to buy down there, right? So now what would you look for, right? Now you're looking for the retracements, but now look what it's kind of doing, right? It's kind of making a W.
Yeah.
You see what I'm saying? So if anything, what I would probably do is I like for price to come to me, right? So what I would probably do is if anything, right, I would probably put bless you. I would probably put a buy stop right at that level where that W is crossing the middle of the W. You know what I'm talking about?
Right here.
A little bit, yeah, right in there, yeah.
It goes down.
Yeah. Right in there, I would put a buy stop. So now if price turns around and goes back down, I don't got to worry about it. But price comes through there, I'm going to catch it going up because W's push the market up.
And isn't this a reversal candle? It's like a doji or something like that. I've been reading up on candles.
Oh, yeah. There you go. There you go. Yep. Right, and it did reverse, right? It went the other way. Okay, great. Yeah. But then what happened? It turned around, and now you got an engulfing candle again. A bullish engulfing candle, though.
Right.
Yeah.
Which is good.
Yeah, because, I mean, it's forming a W, it looks like. It's a double bottom.
I was looking for that word. I couldn't think of that word for nothing. Because I've been looking, since you mentioned Oren Wright, I've been looking at a couple of his videos, and he stays screaming double bottoms and head and shoulders.
Yep. So now put a line right there at the top of that. Maybe even at the top of that wick or somewhere close in there.
Right here?
A little bit further down.
Body.
A little bit up. So maybe like right in there. You see, if you look left, you see
consolidation right here.
And support right there, right? Keep going.
Yeah, that's what
Keep going left. Let's see what's to the left of that.
Yeah, more right here.
Okay.
Support.
All right.
Yeah. So between those two lines, it's definitely been bouncing off on the 1 hour, you could say.
Yeah, it went up, right? It came down, that's fine, but then it went back up across that line again, right there, right? So then it came down. Okay, keep going to the right now. Go back to current price. Okay, so now you can see like it came down, well, it came up and then it hit that point, it hit that line a couple times, right? Like maybe, well, like twice, right? Or one big time. And then it took it all the way back up. Then we had this big candle and it went up and it rejected, right? It rejected at that doji, correct. But it came back down. Now we got an engulfing candle and we know that it's forming a W. W's push the market up. So that would be why I would be comfortable putting that line right or put my entry point right there. But I would still only put it at a 0.01 though. Do you see what I'm saying? Like, don't be going crazy because you don't. So I would put a 0.01. You don't have to get rich off of it, but you did. I can't see the number because it's a little bit blurry. But if you measure that distance between where you would enter in at the buy up to where you were going to get in at the sell, how many pips is that?
38, 40.
I mean, so you understand what I'm saying? That's cool.
I usually stack 2 trades anyway, so I'm cool. Everybody, that 40 pips a day is what I'm trying to get to. So that's what I really want. Yeah.
So you did that. Okay, great. Right. Then you turn around and now you got it set for the sale. Okay, great. Going to work. You know what I'm saying?
Yep.
Okay. So does that help?
Yes.
Okay.
Yes, it does. Thank you very much.
You got it. Okay. So stop sharing your screen for a second.
There we go. Stop sharing.
Okay. So guys, was that helpful? Everybody see what we were doing?
Yes, indeed.
Right. So people are like, oh, I got to look at the chart. I got to look at this, Lord. Okay. You can look at it just for a second to pinpoint where you want to get in at, and then just put the limit. Just put the limit there. It might not turn around on the next candle, right, and get right there. It might not come today. It might not come tomorrow. It might take a little bit longer for it to come, but it's almost one of those guaranteed hits. You understand what I'm saying? It's like you want the most high probable scenario. If it doesn't come to the 50%, then oh well, you're not at a loss. But if it does come to the 50%, you're going to be right there to catch it. I mean, there's nothing to lose at that point, right? If you follow the rule, it's got to be one of, stop, Josiah, come on, baby, stop, I'm talking. It's got to be a large candle, though. It's got to be a large candle. And you can't do that on these little, you can't do on a large candle on the 15 minutes because the large candle on the 15 minute, okay, go in your room. I'll ask you, stop. The large candle on the 15 minute doesn't have the same reference point as a daily candle. 15 minutes is 15 minutes. A day is a day. I'd rather look at what has happened over the day versus what just happened in 15 minutes before I make a decision. Here's an example. If I'm gonna get a report from my son at school, don't tell me what he did every 5 minutes. Like this 5 minutes. Over the whole day, overall, what was his behavior? Oh, over the whole day, he was perfectly fine. But it was just right those 10 minutes before nap time, he got cranky. Okay, well, that's nap time, right? That's not indicative of his character. That's just before nap time, he get finicky and he's cranky. Do you see what I'm saying? So I can't judge the trade off of 15 minutes of time. What does that have to do with anything? It's just indicative of at that moment, but over the whole day, what is his behavior over the whole day compared to yesterday, compared to tomorrow? Okay, now I have a better picture of how this kid behaves, right? Don't come to me with, oh, he did something in 5 minutes. Don't call me with no 5-minute stuff. If he's being disruptive, it's all day. He at the principal office, he in timeout. You know what I'm saying? It's all day. Come holler at me. But because he fussing with a little boy about a fire truck and it took 5 minutes of that dispute, I can't be disruptive for that. Y'all know what I'm saying. Y'all got kids, right? It's not worth it, right? It's not. Same thing. It's not worth your time to be worried about that little 15-minute candle. Show me the day. Does that make sense? Okay. All right. Cool beans. Let's do one more. So I can show y'all this other stuff real fast for our third session. Who wants to go? Thanks for being a good sport, Willie. Appreciate you. Okay, go ahead, Sheila. Josiah. You do it again, you're going to get a word. Say a stop.
Okay. Start from scratch, right? Oops. Move. Okay. So.
Wait, Sheila, before you start, let me confer with my analyst over here, Mr. Valentino Crawford. I forget because Tino be knowing this stuff. Tino, what's your feedback on what we just went over?
Willie did great. You did great. He's comprehended it pretty well. You're doing a great job in teaching it. I mean, everything was on point. I mean, as far as, just cleaning up what we were analyzing, everything was great. Something to take in consideration to add to it. Another reason why we look at it daily is because the folks with the big money move into higher time frames. So their money makes more of an impact than people that are trading on the lower time frames. So you want to ride the wave. You want to kind of, go with the flow. So the 15-minute, 1 hour, yeah, that's fine. But those are little splatters, whatever. But the whole current is based on the higher time frame. So you want to go with the current, go with the wave. And that's why you want to maximize on a daily, because now you can kind of have a feel what's going on. And just take advantage of the pullbacks as you're going in that direction. I don't know anything else want me to add. I mean, you got questions, whatever, what? Everything looked fine.
All right. Just making sure everybody, I just needed a second that motion. That's all. Okay.
I've been really reading up and trying to get this stuff right. So thank y'all.
Mm-hmm. Okay, go for it, Sheila.
Okay. Okay, so all right, so first I'm looking for my engulfing candles, and
Okay, we don't see your screen now.
you don't? Okay. Let me share my screen again. I thought I did. Do you see it now? Do you see my screen? Okay.
Yeah, we can see it.
All right, thank you. All right, so let me just remove this other stuff. Oops, remove. Okay. So my engulfing candle, starting from the bottom down here. I'm using this green candle here. Okay. And my rectangle.
You used to wait.
Yeah.
Yeah, because it used to wait.
Okay.
Like a body.
Right. I want this. Green. Here. Did I miss one?
There's a coffee right there.
Okay. I was looking for maybe a longer red candle like this. Just around the same area.
Okay.
Okay. Now, when I've done this, I've always also looked to see if there was more to the left, which there was for this pair. Just to keep it in mind. Okay, so the one I want to go to is this one. Oh, forget that. Okay, and then going up. I'll just use this one.
Okay.
Okay. Oops, I forgot the color. Oh no, I did that. Okay. Here. So then a line chart, and I'm going to use blue. I'll change it to blue when I get one up. Start from down here. Okay. Then and here. Do you ever feel like, I know Willie talked about this, but Tracy, do you ever feel like you could be putting too many lines?
Yeah, it just depends on how the market is moving.
Okay.
But that's why for me, sometimes I'm not putting lines in at the 4 hour and the 1 hour as well. So for me, sometimes I'll just kind of use the lines that I already have on the daily and just kind of ride from one point to another on those lines.
Okay.
But I do like that sometimes.
Okay. So now, I guess I could do this one or here. Okay. And then my array. Okay. So I've identified my supply and demand zone. I got two on the bottom, two on the top, and then my array, so that I see that it was in an uptrend, and it's possible that this could be another supply zone happening right here because it started to come down, but I don't know. For now, I just have this as my supply. I know people are in a long sell right now with this, but anywho, go back to my candles, and now I'm supposed to show where I would get in, right, Tracy? Okay, so I see that the price can still come down to this horizontal diagonal line I drew, and it. What were you gonna say?
Yeah,
and it could either go through or bounce back up. So I do have that in mind. But if I go to a 4 hour chart.
Hold on. Go back.
Okay.
So based on that analysis that you have right there, knowing what you know about how many times price hits a level, what would be your expectation?
My expectation would be for it to break through, because it's going to be the fourth. Well, it might be the fifth. This is, one, or is this two?
No, this is one.
1, 2. I'm not sure if you would count this as 3.
No, it's just 2.
Okay, 3, and then this would be 4, and it could possibly break through on the 4th, and it could possibly bounce. So this is the part where we sit on our hands. So that's why I was thinking, once this either hits this line or breaks through, then I'll know what to do next based on what I see right here. Okay, and the 4 hour chart. Okay, so I'll get rid of my background. Okay, so I see how it's been in between this area for a while. I'll keep that into consideration, so that if this sell candle does hit this line and breaks through, then okay, I know it's going to continue to sell. But if it hits this line here and bounces back up, then I know it could potentially go back up to here, or it can go way past that to up to here, or it could go way past that and go up here. So that's what I have understanding of. Does that sound right?
Go back to the daily.
Okay.
Okay. So that candle that is in that sale right now,
Mm-hmm.
is that a big candle or a little candle?
It's a big candle to me.
Okay. Which means that what do we usually expect when you have a big candle?
What we expect is for this to bounce, to retrace up 50% of the length of that candle.
Right. So one of the first things that I do is I would just put a sell limit. Like, I'm just trying to keep everybody on the page. At least, you know, you getting into a trade that you know at some point should happen. It might not happen right away because it could come down below the trend line and come back up and test with a wick and hit it, right? And pull it back down. We don't know when, but I want everybody to get in the habit of looking when you see those big candles like that and you know something's getting ready to happen, look at it from a 50% perspective.
Mm-hmm. Okay.
Right? 50% or maybe even a little bit more. Sometimes it's 61.8. You know what I'm saying? But at least 50%.
Right.
Right? Mm-hmm. So then there you go, right? So then you figure that out and then, you know, you're done, at least on that, right? So there you go. That's one thing. You put 0.01 and then your stop loss would be where, Sheila?
If I was putting in this for a sell limit, then my stop loss would be about 4 pips above this wick.
Well, technically you want it to be 3 to 5 pips above the high, which is up there.
Yeah.
Okay. If you put it there, you could. It'll just, you know, minimize your risk or something like that. But really, you want it 3 to 5 pips above the high.
Okay. So it'll be 3 to 5 pips above this. Here, it's right here. This one.
Mm-hmm.
Mm-hmm. And here's my 50%.
And now when you do that, then you look left.
Okay.
Right? Look left and see what's going on.
Right.
Right? Okay, well, that's a pretty strong area, right? That's a major zone because price is bouncing off of it as support and price was bouncing off of it, if you keep going back left, as resistance.
Mm-hmm. Yes.
Right? So that's a major level right there.
Agreed.
Right? From the wick standpoint. All right. So, I mean, there you go.
Okay. So this technically right here could be a entry. Where's my...
Now, for example, so Willie, this is why technically we wouldn't chase this big candle, right? You don't chase the big candle. You wait for it to pull up, right? Wait for it to pull up. And once it pulls up, now you get in. Now, the way it's looking, and I don't know, right? But the way it's looking, it's like, okay, it may not break on that, but it may. You know what I'm saying? I don't know. If it breaks on that, then it won't even trigger your 50% maybe right there. You know what I'm saying? Okay, don't worry about it. But if it doesn't break right there, it comes back up and retests, then it'll turn around and probably pull right down through that trend line on that one.
Mm-hmm.
Right? Because you see how close it is to that? How close it is to that trend line? I don't have that much space. Right? So, I mean, it's like something's got to happen.
Indeed. Okay.
So that would be the first thing I would look for, Sheila, is I would be looking for that thing to come back up at least 50%.
Okay. That helps. I mean, because I missed that yesterday when I was in, I missed that yesterday. And then today when people were trading USD CAD in Oren Wright's Telegram and someone else's, they was like, okay, It's done selling. Now buy. I was like, but to win. So this is now reminding me. That's the clarity of it. Why they're saying it. Okay. Thank you.
I have a question, Tracy.
Okay, go for it. Hold on one second. I'm having a kid catastrophe. Hold on.
Bring your supply and demand together.
Like this?
Yeah, I want to be able to see both.
Okay.
Okay, go for it. No, I can't help you right now, son. Okay, go for it.
So, like, I noticed everybody's creating all of those lines in between that supply and demand zone.
Mm-hmm.
Can you use your fibs in between that supply and demand zone to create those lines?
You can. You can always use your fibs if you want to use your fib levels.
Yeah. So okay. Because
what I would do is I would just look at how your fib levels match up, right? I mean, you can always test it. So, like, Sheila, if you made that a little bit bigger, I don't know why you did that small like that, girl.
Oh, because he wanted to see both supplies.
But only need to see this, not both.
Oh, I thought
just
you
in
asked
between
me.
that.
Oh.
So if I put fibs between here and here,
Okay.
because you got
Yeah. So I mean, so that kind of goes into what we're talking about with swing high and swing low, which is kind of what we were going to talk about today. Okay. So we'll get into that in just a second.
okay.
Sheila, don't go too far with that, but stop sharing for a second.
Okay. Alrighty.
Okay. So does everybody understand what we're talking about? The 4 touches, right? You saw on that trend line. The rule applies to the support resistance. It applies to the trend line. It's kind of like the rule of thumb, right? And so if you see that price doing that, even if price did what it wanted to do, your analysis has to be based on something, right? And the analysis for us getting into a sale is that's a confirmation. Right? Now, could it turn around and completely shoot through the roof if it wanted to? It could do that. But if it did that, that would be totally out of characteristic for this pair. And you should be okay with that, right? If you have a stop loss up there, 3 to 5 pips above the high, right? So, okay, you just lost on that one, but your theory for why you make your decisions should still be the same. That's what I want everybody to understand. Don't change up your theory because you caught it on that one time where it didn't go that way. But all the other 9 out of 10 times it went that way. And on the one trade you took, it didn't. And now you want to reevaluate all the Forex trading. So my point is that you gotta get your mind into the habit of process, right? So drawing the chart is a process. Now that you draw it, what are you looking for? If you got a big candle, the next process is what? Look for 50, wait for the pullback, right? You got to look for that. Yes. Good job. Thank you. You've got to look for that 50%, right? Now, if the 50% is not available at that point, okay, then move on to something else. You understand what I'm saying? But don't let an opportunity blaring you in your face go by because you're chasing the trade, right? Don't do that. Don't do that. And that's really what we mean when we're saying buying in the middle, right? I mean, or selling in the middle. Only time you really want to do that is on a pullback, right? But the ideal times to get in are at the bottom when it's getting ready to go up or the top when it's getting ready to go down. Anytime you're trading in the middle like that, it better be a pullback. It doesn't mean the middle of the zone particularly. It means if the price is going straight up, 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 and you're looking in the middle and you trying to get in the middle with no pullback. Don't do that. That's what we're talking about. Wait for the pullback, then get in and ride. The price has to correct, right? It has to correct. It has to correct. If it doesn't correct right away, it will. It will. And that's where the patience comes in, right? So something I can appreciate, Willie says, like, oh, I was just being impatient. Okay, well, that's fine. So then if the trade go the wrong way, all Willie can say is, well, shit, I was just being impatient. It's not anything anybody said or did wrong. It's just I knew I should have waited for the pullback and I was being impatient. Okay, that has bitten us in the behind, all of us, all the time. You understand what I'm saying? It ain't like that's something new. That's what we all have to scratch off our guilty list, right? With just wait. I'm constantly saying to myself, constantly, like self-talk, looking at the trade, wait for the pullback. Just wait for the pullback, Tracy. Just wait. Just wait. Just wait. Just wait, right? I have to talk myself off the ledge every time for my own good, because I've gotten burned every time I don't wait. So I already know not waiting is not good for me. All right. So waiting is good, but it's just, you got to train your brain to do that. Okay. Any questions on that stuff so far, guys? Okay. That's really videos 1 and 2 kind of together.
I got a question, Tracy.
Yes, sir.
Hey, when that say it's a bullish candle, a long bullish candle, and we're going to go for the 50%. If we use the fibs on it, do we measure it from the bottom of the wick or where the price closed?
The wick, the top
Okay.
to the bottom of the top, bottom using the wick.
Okay, just wanted to clarify that. Thank you.
Mm-hmm.
Oh, and by the way, you're doing an amazing job.
Oh, thank you, Mr. Gary Viney. I appreciate that. All right. All right. So guys, now what I want to do is I want to talk a little bit about the pullbacks, right? I'm going to share my screen. Hold on one second. I don't even have my, hold on. Let me pull up my charts. I don't think I have them even set up. Oh, I do have it right here. Hold on. Okay, hold on. Okay. All right, so this is my UJ chart, essentially, right? Same one we did from the other day, all right? And so, I'm gonna tell y'all something I did last night. I mean, I didn't lose, but I got scared. I'll tell you, I got scared, right? So to be honest, so I got in this trade, right? So this big candle happened, right? I was doing a training with one of our other team members here in Atlanta. She wanted me to show her some stuff. So I got decided from the school trip, and I went and met her at Dunkin' Donuts. And I saw, like, I didn't know UJ had dropped, right? Until we pulled it up. We pulled it up, boom, UJ dropped. I was like, oh my goodness. All right, let me just wait, right, for the pullback. So boom, I got in at the 50%, right? Okay, fine. Now the thing was, so I got in like right at this magenta line, right? Because it's wick to wick. Y'all see that? It's wick to wick. Okay. So I got in right here around this 50%, but something in my spirit was telling me do 61.8, right? But I didn't listen. I said no, because I was scared. Like, I was like, it was fear missing out. I was like, okay, what if it comes up to 50 and then turns around and it never triggers my 61.8? I was going to be mad, right? Because I wanted to be in this trade. So I went on ahead and I put my sale limit in here, and it kept going up. So I was negative for a little bit, not too much. It was just a 0.01, right? Then it finally came down here, and then it took forever, right? I'm going to show y'all because that's the 4 hour, right? So I got in right here, right? And look what it did. It did this forever on me, right? For a few hours. And so then it was time to go to bed, right? So now I said, okay, it was around this candle. Was it this candle? That's like 7 o'clock candle. Or was it this candle? I can't remember which candle it was. Oh, that's in the morning. Hold on. Let me go back. Because it had to be, no, it's right around here, like 1 o'clock in the morning. That's what it was, right? It's like 1 o'clock in the morning. And I'm like, okay, I'm in. It dropped below this level, right? I knew it was going to come back up and retest. And I figured it was going to retest this level, but I didn't really know what it was getting ready to do fully, right? Because I'm laying in the bed, I'm looking at it on my phone. So you see what I'm saying? So my thing was, I really should have had this more marked up, but I didn't because I was at the Dunkin' Donuts when it hit me, right? And then I was trying to do everything on my phone. And so anyway, my point was I couldn't see everything, right? So at this point, I'm like, all right, what I'm going to do is, I know it's going to probably come up and retest, but then once it comes back down, I want you to take me out. So that way I'll be out in the positive, right? I don't know what it's getting ready to do. And so I got out this trade, y'all. I kid you not. I wake up at 7 o'clock to take Josiah to school, right? So this candle right here was in progress, right? When I woke up, I looked and I said, oh, shoot, good, I'm in profit, right? So I closed out. And look what the hell it did at 8 o'clock. Soon as I got in the car, right? We're in the car now. We're driving to school. He had to be there at 8:30. I'm like, you've got to be kidding me. Now, I'm not in the trade. I was in profit, but I was mad, right? Because my fear, right? My fear, I couldn't see, and I was lazy. I should have got up, right, and come and got on my computer and reassess this whole thing and said, oh man, I'm perfectly fine, right? I'm perfectly within reason. Don't trip, right? Or if you're that scared, put your stop loss at the top of this, right? If you're just that scared, put your stop loss at the top of this, and then you don't lose really nothing. $2. That's like what, 20 pips right there. You lose like $2 or something. So I got it. What, baby? Okay, I'll work with you and Thomas later. All right, so then this thing just fell right down through wherever it fell down through, right? So now I knew don't chase it though, right? Don't chase it at this point because I was already in up here. I should have just stayed in up there. So now, as I'm looking at this whole thing, it's like, okay, well, Trace, when do you get back in this trade? Right? When is a good time to get back in this trade? And that's where what I'm going to share with you guys tonight, where it comes into play. Okay. What we're really going, or what I'm going to look for, what we should all look for is the swing high and the swing low. All right. So the swing high is like when the price swings high up to the top and then drops down, right? The swing low is, price swings all the way down and then turns around and comes back up. So how do you identify the swing low or the swing high? Well, the swing high, like if you look at your fingers, right, you look at your hands, your middle finger is the top, your middle finger is the highest, right? That's the highest point. And that would be like representative of the candle with the wick even, the highest point. And it has to have 2 candles to the left and 2 candles to the right that's lower than that middle candle. Okay, if it has 2 candles to the left and 2 candles to the right that are lower than this top candle, then it is a swing high. Okay, so if you look at this green candle right here, see this, the wick right here, so it already looks like a high point. So how do I confirm that it's the swing high? It could be a high, but it might not be the swing high. Everybody understand what I'm saying? All right. So I have to look. Are the 2 candles to the left below it? And are the 2 candles to the right below it? If that's the case, do you guys see that this is the swing high? Right? So that's the swing high. So now in order for me to figure out where the swing low is, same thing, just go this way. Turn your hands down this way, right? So you have to have the lowest point and 2 candles to the left have to be up and 2 candles to the right have to be up, right? So in essence, this would be the swing low at that point. Oh wait, this is the hour chart. Hold on. Let me take this. We're not doing it on the hour chart. Sorry. We're not doing it on the hour chart. Just so y'all know. Okay, we're not going to do it on the hour chart. Okay, so you see these candles right here? Okay, now of these 2 candles, you guys can see that this candle is the one with the highest point. Y'all see that? This candle right here has the highest wick, right? So that means the 2 candles to the left, boom, boom, have lower price, right? And then we only have 1 candle to the right now, right? With lower price. So essentially you really have to wait for another candle to form, right? So in that case, it would have to be a whole day, right? So in that point, I would come down to the 4 hour to see if I could find a swing high and a swing low, right? So now we've got this high, right? And we've got this low, and we could draw fibs from that swing high to that swing low. But as you guys can see, we've already passed that. It's already created a new low, right? So that's not going to be the current swing low. You understand what I'm saying? That swing low and this swing high, whatever was going to happen between here and here has already happened because we've already started to create a new low. Y'all see that? Once this low has been passed, then now we need another swing low. Y'all with me? This was the low first. right? This was the low until when? Until 5 o'clock this morning.
I have a question.
Yeah.
So swing low, swing high. That means my definition is no consolidation in between.
Well, it doesn't matter. I mean, consolidation is not the issue. Because what the issue is, the top and the bottom, the high price and the low price. Whatever happens in the middle, whatever happens in the middle. But I'm looking for the low price and the high price.
So why didn't you go? Why did you stop at the candle with the wick? You know, the second candle. Oh, because you said 2 candles. No mind.
Right. It has to be 2 candles to the left and 2 candles to the right have to be lower.
Gotcha.
Right here, that's not the case.
Yeah.
Right here, that's not the case. Right here, that's not the case. Right here, that doesn't matter because we already have a new high.
Right.
Okay.
Yeah.
So in this case, I still kind of have to wait. I still have to wait at least even on the 4-hour chart until Sunday, where at least 8 more hours go by where we see what the next 2 candles are going to do. Right? If the next 2 candles are higher than this bottom point, then this would have formed my my swing low. Okay, I'm going to try to show it to you on a different pair. Let's see, because sometimes it's a little bit more. You can see it better. Okay. Okay. So here we go. See the top of this wick right here? No, not that one. That's not a good indication of what I'm trying to show you. This is a good indication of a swing low. Thank you, Josiah. Please stop, though. Okay, here's one. See this green candle? 1, 2. Right? Because I'm looking at high points. I'm starting. Don't start. Go in your room. Do not touch my phone. I'm looking for the high points. Okay? So we've got here, you can see the price came down and it went up and it didn't go any higher at that point. Right? If I'm looking at this chart at this time, there's no higher point at the point in which it swung up. Y'all see that? Okay. Then if I come down here, I'm looking at the lowest point. So this was the lowest point. This wick on this green candle was the lowest point. Y'all see 2 candles to the left are higher and 2 candles to the right are higher. So this is the lowest point, right? So let me go back to explain what we're looking to do. We're looking for, if we miss this move, right? If you miss this move, you see this bullish engulfing and it turns around and comes back down and you miss it and boom, you miss the entry right here at the zone. You miss it and you catch it right here, right? This would mean don't get in on the middle, right? You got to wait for now. You got to measure the swing high and swing low, okay? Which is going to help you identify your pullback. That's what all you're doing is if you take your swing high and your swing low, when we get ready to measure it, we're measuring how far back we think the pullback is going to be before we get in on the continuation of the trend. Okay? So here, this is the low point. This is the high point. What I'm going to do is I'm just going to put a line there so everybody can see what I'm talking about. Okay? Right? This is the swing high. This is the swing low, and this is the swing high. All right? So now I miss getting in right here. And I'm like, oh, Lord, what am I going to do? Right? So I have to keep waiting now. I have to wait until I get a high point is what I'm trying to say. You have to wait. Right? So if you see this candle forming right here, and then this candle starts to form and it goes higher than this candle, you got to wait. Because now this is a higher point. And it's not until this candle forms and you see it doesn't go any higher, and then this candle forms and it doesn't go any higher, that now you've identified this candle as being the swing high candle, and then you've identified this one as being your swing low candle. Okay? Does everybody see what I'm saying? Is there anybody who does not understand what I'm saying? It swung down and it's created a low point. And then it swung back up and it created a high point before it started to go back down. Y'all see that? Okay. So now what happens is we want to get on this trade, right? We missed this entry point right here, for example. That's why we're looking at this. We missed it. Oh, shoot. I should have had my buy limit set and I didn't. So you missed it. Now you coming along in the middle of the trade and you're trying to figure out when to get in, and you decide you see this big candle right here. Now you're going to get in for the buy right here, right? You get in for the buy right here. The high has not been formed yet, and you get in for a buy and it turns around and goes down, tanks on you. What happened? What happened is you didn't wait. Okay. So what we're going to do is I'm going to take these circles off so you can see the wicks. Okay, you just need to know that that's a swing high and a swing low. Well, I'm going to get my Fibonacci, right? And I'm going to draw my fibs from the bottom of the swing low to the top of the swing high, right? Or really, let me reverse this the other way. Okay, everybody see that? So this is the point which we started. This is the point in which we ended. Y'all with me? Swing high to swing low. We're looking for the retracement. Okay. So the rule is we're looking at anywhere between 38.2, 50%, and 61.8. Ideally. Now, of course, it could go anywhere, but ideally is what we're looking for. Right? So what could happen? What could happen is, okay, these two candles form. I see that now this is my swing high, this is my swing low, and now I've got these fibs ready, right? So now I can see, well, man, 61, 50, and 38.2 are going to be my areas that I'm going to look for, right? So what could you do? You could set a buy limit at 61.8, right? And if you had done that, then this would have picked you up and took you up. You would have been happy, but then this turned around and came back down, right? But that's okay. This is what you get. That's why you got to practice it, right? So 61.8, all right, it picked you up, but that wasn't it yet. You could have put one at 50%, right? It would have triggered you, but you would have went down, okay? And then you could have put one or you could have put one at 38.2. In this particular case, 38.2 was the magic number. Y'all see that? I mean, it went down a little bit on this next candle, but overall, 38.2 was where price was solid at, right? So you could put a buy limit, 38, 50, 61 are your ideal points. So let's say Willie's looking at that UCAD, right? And like, oh my goodness, that big old candle is going down. First thing is that big behind candle, 50%, right? Okay, but now you missed the 50%. So now the trade is continuing to go down, 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 down. But you're looking now for the swing high and the swing low. Why? Because it's still a trend, right? We're looking for higher, in this case, we're looking for higher highs and higher lows. That's all it is really, right? From the low to the high. Then here's the new low, right? And then here's the new high. Y'all see that? And then it keeps going. Here's the new low. Here's the new high, right? We're creating higher highs and higher lows, but now we're using that higher high and we're now using that higher low to determine how far back a pullback would take or come before we got in to continue riding that trend. This is what I'm saying, clicking. I'm trying to explain it at the same time that you understand conceptually what I'm saying as well as visually what I'm saying. If you conceptually understand what I'm saying, we're going to take the low and the high and it's got to pull back. It's going to correct. When it corrects, the biggest question is, how do I know how far it's going to correct? You don't know when to get in because you don't know how far it's going to pull back. So you don't get in on the pullback. When people say get in at 0.01, like we've been saying, and then on the pullback, get in on your real lot size. Well, if you don't know when to get in on the real lot size, then now you never have the real lot size in there, right? You're just riding a 0.01, which is fine, but that's where the money is being made with the traders, is that they understand I'm gonna get in on position at 0.01, and I'm gonna wait for the pullback on for the major. But okay, look at you, this kid, look, just okay, and I'm gonna get in on the pullback for my real lot size. I'll see you. You look awesome. We will, but if you keep bothering me, we won't. Go sit down.
I'm staying here.
Go sit down.
Stay here.
Okay. So everybody see what I'm saying? So we would have got in, let's just say, right? This would have been our ideal entry point, right? Remember, video 2, where's our ideal entry point? Ideal entry point would be right here. Why? Because price came up and closed above the zone. It turned around, came down, retested the zone. Y'all see that? That's the first retest after closing above the zone. And it's a bullish engulfing candle. Y'all see that? I mean bearish. I mean bullish. And it is a bullish engulfing candle. That's right, baby. All right. So now it comes down, it retests. That's where we would have wanted to get in, but we missed getting in right there. So now we want to get in for real with our real lot size, right? And we don't know how to get in. So now we got to wait until we can create our swing low to our swing high. The swing low is already created, but the swing high has not been created yet. You have to wait until the swing high is created. How do you know when it's been created? At this point, you got to wait for 2 more candles to form after that, what you believe is the high. If another candle comes and closes above that candle that's high, that's not the swing high. Now you got to wait again. Okay? So we've got the swing high. Now we've got swing low, swing high. We get our fibs and we go from the bottom to the top of the fibs. The bottom of the top of the swing. Then what we're thank you, Pumpkin, please stop.
There's another party downstairs.
Go sit down.
There's another party.
Thank you. So now what we're looking for ideally is the 61.8, the 50%, and the 38.2. All right? Those are like your ideal areas. That's what you're looking for. You don't always know exactly which one it's going to be. Okay? But at any rate, that's what you're looking for. So what you could do is you could put a 0.01 at the 61.8. You could put a 0.1 at the 0.5, and you could put a 0.1 at the 38.2. You could do that. Or you could say, I don't want to play with it. I'm just going to put one down here at the furthest point. Or you could, you know what I'm saying? Like, you got to play your own game and how you work it for your own sanity. But those are the areas the sweet spots that we're looking for. Okay. So now let's just say we said, okay, we're going to wait till it's 38.2. Now we get in right here, which is fantastic because it also happens to be our second bounce, doesn't it? So now you have 2 confirmations, don't you? You've got the fact that this is the second time it's hit that zone. And now you got a confirmation that it's at the 38.2 of the swing high, swing low. Right? So if you were going to place that trade, that's a reason to place the trade. If you don't have a reason to place the trade and you're just placing the trade because, oh my God, it looks like price is taking off, that's not a good reason to place the trade. The reason to place the trade is because it has met at least 2 confirmations. Everybody understand what I'm saying? Have a reason why you're trading. Don't trade because it looks like you should get in. Trade because you've measured it, you've done something, and it makes sense. So that if at least it goes wrong, what could you do? You could very well get on IML TV with Oren on Saturday and say, look, I got in on this trade, it went the wrong way. Or I said, well, why did you get in? You said, well, I did the swing high, swing low. It was 38.2 and it was the second retouch. Now your master trader can help you understand something outside of our scope of that basic level of understanding. You got something to work with. But if you tell him, oh, I just got in because, I don't know, I saw this big bull candle coming down, this big bear candle coming down, and I just got in, and you went south, well, that's not a reason to get in because you're supposed to wait 50% anyway, which in that case, you would have done better waiting for the 50%. You can see at 50% or so, it picked you up right here, didn't it? And it still went down to the zone. You still should have won some pips if you just waited 50%. You guys understand what I'm saying? The rules are happening over and over and over and over. So at any rate, you get in. Now, once you get in at the 50, 38.2, or 61.8, what you're really saying now is, okay, now I'm in this trade. When should I get out of the trade? Right? You're getting on the pullback. Now, it depends. Remember, ideally, what we said was, if you're getting in at the demand zone, you can pretty much ride it up to the supply zone, right? You can pretty much ride it up to the supply zone. It might take you some time to get there, depending on where the supply zone is, but you could do that, right? Or you could say, all right, I'm going to get in here. Here's another way to identify take profit, okay? Let's just say that you got in on this second touch, right? You got in on the second touch. What you want to do is you want to take your zone, and actually my zone is, oh, this is based off the daily zone. Okay. You want to take your zone, right? Oops. And you want to copy your zone. Oh man, it created that line. Hold on. Let me make sure it's getting my zone. Is it getting my whole thing? There we go. All right, so now I want to clone that whole thing. And then what I'm going to do is I'm going to move it. I'm going to move this zone up and stack it right on top of this other zone. Y'all see that? So I'm going to get in at this point right here. And you want to know, well, when do I get out? Well, one way you could measure that is to take a copy of the zone down here, stack it right on top of that zone, and you could ride this thing up to where? The top of this zone. Everybody understand what I'm saying? You could do that. Now, if you did that in this particular case, that would have gave you 41 pips. Is that okay with everybody? That's okay, right? I mean, hindsight is 20/20. Now we can see it's already went all the way up there, but at the time of this trade, you might not have known it was going to go all the way up there. So how do you secure the bag? A measured move. That's what this is called, a measured move. You take the same distance from here to here and go from here to here and get out. All right with me? Okay. So that's one way you could identify your take profit, okay? Back to the swing high, swing low, what we're gonna do is we're gonna do the fibs, and remember how we just cloned, we just copied this zone on top of that zone? Now we're gonna do the same thing with the fibs. We got this fib, and we're just gonna put another fib on top of it, okay? Now, because it's colors and all of that, don't let that confuse you, right? Because that's kind of the way this particular tool is with all these other zones. But we're just going to be focusing on the 0 point and the 1 point. Okay. So if I were going to do this again, I would click on my fibs. I would clone the fib. Y'all see the second fib pop up? And now what I'm going to do is I'm going to grab this fib and I'm going to put that 1 or this 0. You see this 0 over there? That's the bottom of the fib on this other one, right? I'm going to put that 0 right where the previous one has the 1. Y'all see that? So going to stack it on top. hold on. I'm just going to stack it on top. So now I got two fibs on top of each other. And whatever point you get in down here, if we get in at 38.2, we're going to get out at 38.2. If we get in at the 50, where are we going to get out at? The 50. If I get in at the 61.8, where am I going to get out at? The 61.8. Y'all see? So when you get in on your real lot size, so you get in at, you make this one, 10 cent, boom, get in position. You ride that up, but you know it's going to come back down and retest. So it does. It comes back down and retest. When it comes down and retest, you're at break even on, you have no money now, right? Because this was 10 cent. It went up 40 pips. So you was up $4, right? You could have got out, right? Once you realize this was the swing high, you could have got out, right? And just let it come back down. That way you don't forego all $4 of your dollars. You guys understand what I'm saying? If you make the $4, okay, if you have this line drawn in the first place, right? Maybe you would have got out here because this maybe would have been a support resistance line, right? So you know you're going to ride it up to support resistance, or you could have rolled it up to the previous level of consolidation over here. Y'all see that? Right? So you ride it up to this point. Okay, fine. So you get in on the first retest and you ride it up to what? This area right here, but over here, right? I'll put a line right there. Everybody see what I'm saying? I'll put a different color. Right? We're talking about take profit points, right? So I would have got in at the yellow circle. And how do I know when to get out? I get out at the previous level of consolidation. That would have been my 0.01. Y'all with me? 0.01. I got in, I made $3 and something. Okay, great. Now I'm waiting for the pullback. Why? Because I'm looking at my swing high and my swing low, right? The lowest point and the highest point is going to correct. It's going to correct ideally 38.2, 50, 61.8. So now I'm going to wait, and I can put in buy limits at any of those areas if I want to, or in one area or whatever area you want, but that's what you're looking for. So now let's just say you waited for the lowest point, 38.2, boom, you got a buy limit set right there. Why do you have a buy limit set? Because you drew your fibs back here. You drew your fibs before this candle even happened. You guys understand what I'm saying? You're planning your moves. You're not opening up your phone, jumping in a trade. You're planning your moves. So now you already know this is 38.2, and you see 38.2 is on your zone. Oh man, I'm really confident in that, right? So boom, you might put a standard lot if you can, or a $1. Right? Or $5 or $2.50, something more than what you would normally put, because it's like this, like you finna bank this. Like, you know what you know. You know it's Mayweather in the ring, is he getting ready to do a knockout. You guys understand what I'm saying? You know what you know. So you put all your money, well, not all, but you put a decent size of it there because you have a very high probable trade getting ready to take place. Why? Because we got two confirmations right there. Okay, so boom, you get in here on your dollar trade. When you get in here on your dollar trade, you got to already have these two things stacked up and know that your take profit on 38.2 is going to also be take profit right here at 38.2. And lo and behold, isn't that right at the top of that wick? Right? Right at the top of that wick. Okay, great. So now you get in right here, you set your buy limit, you set your take profit, and guess where your stop loss goes? 3 to 5 pips below the low. The low is over here. Y'all see that? Okay, so now you got all that set. All right, Gary, you go to work. You done. You understand? Okay, great. So now you come back, or you're checking your trade throughout the day, and you realize that, oh my Lord, 163 pips. on a dollar trade. $163. Because you know what you know. You know this is the second hit, and you know this is 38.2, and you know this is the top of your zone. And you know how to stack your fibs. And you know where to take your profit so that you don't lose the profit after it hits the point and drops back down. Now, it came back up, but you still would have had to wait 4, 8, 12, 16, 20, a whole nother day. A whole nother day. Overall, it's not a bad thing, but why? When you can just already kind of know that the fibs is like, that's why Oren calls it the fib magic. Okay? So that's how you can find your take profits. But the idea that I'm trying to convey to you is if you miss the first entry point, right? And this just so happens to be the second entry, right? But it could have actually stopped up here at 61.8. You understand what I'm saying? This didn't have to be the second point. It's just more confirmation that it is. But even if this had came down and pulled back down to 61.8 and you got in on your real lot size, and then but see, the thing is, if you knew you were going to put in, if you knew you were going to put in a dollar trade right here, then you got to be willing to accept some of the drawdown. You see what I'm saying? Don't put in that dollar trade and you got a $50 account, right? Because this drawdown would have pulled you out. You understand what I'm saying? It would have pulled you out. So please use proper risk management. But if you had to put that dollar in right here, all right, and then you get in at 61.8, you have a little bit of drawdown all the way down. Matter of fact, let me measure that drawdown. It drew down, look, 56 pips. You would have blew your account. You had a $50 account because you just over leveraging, right? So here's the thing. If you have $50 account, $100 account, you get in at 0.01, your big lot size might be 0.03, right? Or 0.04. That's your big lot size for your pullback area. You understand what I'm saying? If you have a $1,000 account, then, it might be a standard lot size right there. But $50, $100, you might need to stick around 0.03, 0.04, right? Just because you even know that your stop loss is down here, 100 pips. So worst case scenario, you could lose 100 pips. If you lose 100 pips at whatever lot size you getting ready to plop right here, would you still be in the game if you hit your stop loss? If the answer is no, I would not be in the game, you need to lower your lot size. Everybody understand what I'm saying? This is how people getting taken out the game because they're not calculating any of the numbers. They're just getting in the trades, right? So you got $600 account. Great. You come in here, you put a $1 lot size, 61.8. Then you turn around, you get your measurement. You say, what could I stand to earn from this? Draw this thing all the way up. Boom. 159 pips.
Man, Tracy, I wish I would have knew this stuff when I blew one of them accounts a few months back.
Don't we all, Gary? Look, this is why I'm doing this, because I was sick of doing that. You understand? I was sick of it. I'm like, there's no, I'm going to learn this. If it's the last thing I do on the face of this planet, I'm gonna figure something out. I don't have to be the master trader. I got to know every strategy. I don't got to know everything. But if I just know this, everything I taught y'all, right? The basics, drawing the chart, know my entry points, know my what did we just do before?
You mean the raise? The
Take profit.
What did we do the second video?
Oh,
That was the entry point. That was the entry point. So I know how to draw my charts, right? Find my supply demand areas. That's session 1. Session two, know my entry points, this and that. Okay. So then the question was, what if I miss my entry point? Well, if I miss my entry point, this is what I do next. Right now, for me, that's all I'm worried about. If I can't figure it out from that, I'm okay. I go to the next pair. Because that's enough for my brain to handle, right? At this level. I can do that. I can see that. I can practice this over and over and over and over. And I can make money doing this. Y'all see what I'm saying? Doing this. I can make money doing this. And it makes sense to me and I understand it. And all I want you guys to do, hopefully it makes sense to you and you understand it. So that now you can see why certain moves are being made. So that's why I say to you, if a swipe trade comes out and such says get in at this point or get in at that point, I got to go through something. I got to figure out why they're saying that. If I don't understand why they're saying that, I'm not getting in the trade. It's my money. I should understand where I'm putting my money to work at and why. Right? I want the most return for my investment. So I want to see it. So I have to see. If I don't see it, I ain't doing it. Right? That's just me. Okay? So that's that process. Everybody saying, we'll try it one more time. Everybody got the gist of what I'm saying. Swing high, swing low, draw your fibs. Yes, Pumpkin.
Do you do your fibs from the daily or the 4 hour?
Well, you can do it from the daily, but I could.
It's the most accurate, basically.
Yeah, because the swing high, swing low going to pretty much relatively be the same, right? Like for example, now we're in a downtrend right here, right? We're in a downtrend. So what happened is what? Here's a swing high. Y'all see this? Swing high. 2 candles to the right, 2 candles to the left. Then we come down here. Swing low. 2 candles to the left, 2 candles to the right. Right? So what could I do? I'm going to just move this magenta. Right? Stop, Josiah. Please stop. Stop. All right? So the question is, this is kind of moving down in a downtrend, right? And I want to know, when can I get back in, right? I missed getting in up here. Y'all see that? I missed that big drop. So my first rule is what? I see this big candle.
50%.
Even on 4 hour, right? It's still cool, right? So even if I had to guess 50%, probably somewhere in there, right? Where this blue candle, where this blue line is, right? But if I'm not sure and I want to see exactly, then just go get the fibs. See, look, exactly right there. Right? Exactly right there. So boom, I will get it. Now, you see, we had to wait a while though, right? This is where your confidence comes in from doing it. So it didn't get in and drop right away, but if it held that line. Y'all see that? Price did not go above that, or did not close above that line. It didn't. It kept fighting, and then eventually did what? Drop. So I missed this whole big candle. I come up here, I put my sale limit in at 0.01. 0.01 comes, it triggers, boom, I drop all the way back down to where? Demand. Y'all see that? I'm dropping down to the demand zone. Right? Or you could come down to the previous level of consolidation, right? I could drop down to right here. See this area right here? I could drop down to over here. Y'all see that? The previous level of consolidation, this big red candle, and I'm going to sell up here. The previous level of where price was chilling was right here. Y'all see that? So I can put my take profit pretty much at the bottom of these 2 candles, right? So I'm going to get in here and I'm going to get out down here. If I got out down here, right there, on that one little move, that could be an easy 30 pips, right? Easy 30 pips, no big deal. If you want to wait it out, ride it down to demand. Okay, if you get nervous, get out at the next point of consolidation. I'm almost done. Come on, go sit down, please. Okay, we gotta be still, be quiet. All right. So now we've got 50%. So I missed the 50%, Judy. Right? I missed it. I was out. I was on a field trip with Josiah. I missed this whole move right here. Right? So now I'm like, dang, when can I get back in on this trade? What do I do? All right. I need to find swing high, swing low. Y'all with me? Okay. So swing high. This will be a high right here. And then this will be a low. Y'all there? Okay. So now what am I going to do? Oh, let me move it down a little bit more. This is actually right there, right? This is the swing high. This is the swing low. So what am I going to do? I'm going to get my fibs and I'm going to draw from my high. That's right, baby. You got it? High to the low, right, Jay?
Yes.
Right. Swing high. Say swing high.
Yes.
There you go. Give me a high five. Yes. Good job. All right. So now we're looking for what? We're going to reverse now. Y'all see that? We're looking for the sale now, right? So now our 38.2 is up here. Our 50 is down here. And our 61.8 is down here, right? So what happens? This thing comes down. It goes up, but we need two candles, really. Remember? We need two candles. Everybody say two candles.
2 candles.
You need two candles. 1, 2.
1, 2.
This second candle
The second
was
candle.
almost already back at this 100% line. Do y'all see that?
Yes.
Don't draw these fibs without the two candles being closed. You can draw them, but don't get in the trade. You need the two candles for confirmation. You guys understand what I'm saying? This is the discipline of this whole thing.
Okay.
Actually, this was the low right here. So you need this candle
Yeah.
and you need this candle. Y'all see that? This is the swing low. Swing low, you need the two candles to the left to be higher and two candles to the right to be higher, right? This candle and this candle are higher than this point, isn't it? And this candle is higher than this point, aren't they? Okay, so we've got these two candles. Once these two candles closed, guys, aren't we almost already at the 100% level? Meaning that it started here and it swung all the way back there, right? We're right back where we started from. Now stop the side. Now the rule here, the rule of thumb here is if price comes all the way back to where it started from, like it comes back to the swing high in this case, right? Then it's going to also go 100% back down the other way. So you know how like we would draw the fibs would come down this way this time, right? Because we were in the buy, we stacked the fibs on top. Now we're in a sell. So we would stack the fibs on the bottom, right? So, hold on. So we got this swing high, we got this swing low. This thing came all the way. We were looking for 38.2. We were looking for 50. We were looking for 61.8 to get back in on the sale, right? In other words, come up to here and drop. It didn't do that. Come up to 50 and drop. It didn't do that. Come up to 38.2 and drop. It didn't do that. But you shouldn't be in the trade, no way, because you need the two candles after this point to close before you do anything to begin with. Everybody understand that?
No, I don't know what I know I didn't listen. Why do we need two candles? I mean, I understand the swing high and swing low, why we need the two candles below it. But what you just said, that statement, I don't know why we need two candles before we get in the trade. Because to me, you just said the 50%, 38.2, and the 61.8. So we would have lost that trade if we had did that first swing high and swing low.
No, you wouldn't have, because you should not be in this. This is what I'm saying to you. Forget the fib for a second. To even identify the swing low, what do you need?
The lowest point on a swing low. I mean, the low point on the chart.
And the low point, I can identify the low point on the chart by what taking place?
I'm lost. That's I don't know.
Two candles to the left and 2 candles to the right have to close above. For it to be the lowest point, I got to have 2 candles above and 2 candles above. Otherwise, it's not the lowest point. If I have any candles below that point, that's not the lowest point now, right? Those candles will be the lowest point.
Okay.
So in order for this candle to be the lowest point, I need the previous 2 candles to be above in price, right? They're not lower, they're higher than this candle. And I need the 2 candles after. Because this candle could have turned around and came back down here, couldn't it, Willie? If that candle turned around and came back down here, this is not the swing low anymore, is it?
No.
So then I have to wait, don't I?
But I thought we was going off the first fibs that you drew. So that's where I'm lost at.
What I'm saying is that you don't even draw the fibs until you have confirmation that this is the swing low. You don't know this is the swing low until you have 2 candles after it that close above it.
I got you. All right.
I need not be getting in the trade because I have to confirm this is the swing low first. I can't confirm this is the swing low yet, Willie, until I have candle 1 and candle 2 done.
So I wouldn't even have drew the fibs because I wouldn't have known that.
Correct. I mean, or you could have drawn them, but you need to wait. You understand what I'm saying? You have to confirm stuff first. You can't just get in. So I got to confirm this candle is what I'm saying is, hold on. This candle I'm saying is the swing high candle. Right? Why? Because candle 1, candle 2 are below, and candle 1 and candle 2 are below, right? They do not go higher than that candle, do they?
Correct.
All right. So now for me to identify the swing low, I need to have the same thing taking place, but in reverse. So now I need the previous 2 candles here to be higher in price than this. This is my low. And now I need the next 2 candles to be higher than this if this is going to be my low, right? This candle didn't close until up here. When this candle closed up here, that confirmed this was my swing low. Now that this candle has closed and I have confirmed my swing low, now I go get my fibs. Does that make sense? Yeah. I have to confirm the swing high and the swing low first. You can't just look at this and say, oh, this is the low, and then this is still moving.
It has to be
closed.
Coinciding. I mean,
it has to be.
Swing low has to be together.
Well, it has to be the most immediate high and the most immediate low.
But then,
that's the way you identify it, Willie. It's right here. This is a high. Why? Because these 2 candles are below it and these 2 candles are below it. This is a high. You see this?
Yeah.
Right. This candle is not a high. Why is this red candle not a swing high?
Because the other one is not below it.
The previous 2 candles are not below it.
Right. Yep.
You see what I'm saying? It has to be 2 candles before and 2 candles after. It has to be. It must be. It's the rule.
I understand that, but when you drew the fibs from the first part, right?
You talking about from way over here?
Where the first eclipse is at, right? That's your swing high. That should then go down to your swing low.
Right.
But she was pre-staging. She didn't confirm there was a swing low.
I was just showing it to you.
Because after the fact, she was pre-staging and basically just waiting for confirmation because, like she said, it could have kept on going down.
Oh, okay. All right.
So if we're going to do this in chronological order is this. I see my swing high hit, right? I miss my drop, right? And I miss my 50%. Stop. And I miss my 50%. When I miss my 50%, now I'm looking for my swing high and my swing low to help me get in. You understand? There's all types of, like this is a swing high right here. Right here, this is a swing high, right? But if this is a swing high, I mean, I would have been at the 50% at that point, right? Because that was my whole point, was to catch this at the 50% and catch the drop. But my point is I missed all of this price action. I was busy. I wasn't by the phone or the computer. I missed all of that. So when I open up my chart, all I see is this red candle coming down. Damn, what do I do now? Now I got to wait for the next swing high to form. So now I got to sit on my hands. I got to wait. Boom. Then this forms. Okay, great. This forms. Could you get in on the sale here? You could get in on the sale here. You could, but it depends on if you are analyzing how many touches this is. You guys understand what I'm like? The same thing happens over and over and over and over and over. Right? So you could get in on the, so you see this drop. You could come up here, oh, it retested one time and get in on that sale. You could do that, right? You could very well do that. But I'm trying to teach you swing high, swing low right now. I already taught you get in on the first touch, high probable trade, right? Second touch, high probable trade. I already taught that. So now I'm trying to teach you, what if you miss it? What if you miss it? Well, now you got to wait for swing low, swing high, and swing low. So now I see this candle forms. Okay, boom, I got a swing high. Now I got to wait some hours. I go on about my life, about my day, and I come back. Okay, boom, let me keep an eye on this thing, right? Now I see that this wick hits my zone. I'm triggered now. Oh, this might look like a swing low. It might look like it. I don't have confirmation yet. It just might look like it. So I'm watching it, Willie. Right? So the only way I'm going to confirm that, though, is now I got to wait on the next two candles. I'm not doing anything. I'm just watching now. So now this candle has to close. This candle has to close to confirm that this is indeed the low. When that happens, now I'm ready to draw my fibs. Everybody with me? After that, after confirming the high and the low, I'm ready to draw my fibs. So I go over here, I get my fibs, and I draw from the low. Dang, I always do it the other way. Hold on. Okay. Oh, I guess I did it that way because that's really the starting point. I'm kind of anal with this stuff. I like my 0 to be where I start, and I need my 1 to be where it's going. Okay. So y'all see that? So now that I've got my confirmed swing high and swing low, I draw the fibs based on the confirmed swing high and swing low. And what I'm saying is that the sweet spot for all of this, the sweet spot for this is in here, right? 61, 50, and 38. That's my sweet spot, where I'm believing it's going to, so it pulls down. I'm believing it's going to retrace somewhere in this area and then drop back down. And I want to get in when it gets to this area and get in for the sale. But what I'm saying is, because this is our sweet spot and these two candles closed all the way back up to the top of the high almost, you see that? It didn't just come to the 61, the 50, or the 38 like it did over here. See, over here, it came down, but it didn't come all the way back down to the bottom. You see that? It just came to the 38. So fine, we bought all the way back up. Over here, it went beyond the 38. And it went beyond the 38 all the way back to where we started from. So basically, it just did a complete U-turn and came right back to where I started from. Right? That means it came back 100%. That's what this 1 means, or well, that's 0. But technically, that's 100%. Right? It turned around, came all the way back. You with me? When it comes back 100%, the rule of thumb is that now you get in, you could put in your sell limit at this point. You got to keep an eye on it, right? Because now we got different things working. We got a trend line right here now. Don't we see that? We got a trend line right here. So this thing comes all the way back up. Well, if it's coming up like that, it might come back up to the trend line. That's what I would be thinking, right? I would be thinking it's better to buy or sell at the trend line than not, right? Why? Because that's one of the 4 confirmations in the first place. Is it at a trend line? Is it at a pullback? Is it support resistance? That type of stuff, right? So, or is it at a price reversal area? Those are 4 confirmations just from a Daisy Duncan basic trading 4 confirmations. We don't lose all that stuff. You got to tie all these concepts together. So now I see a trend line close to where I'm at. So my thing is, okay, well, this line right here, it could come up here and reject this line and drop, right? Or might it try to wick up and hit my trend line since it's already right there, right? Me, I'd be nervous. I'm gonna tell you right now, I'd be nervous. So me, I'm gonna come to the trend line, right? I'm gonna wait until, so in other words, I'm gonna wait until I think price is gonna hit that trend line where previous level of consolidation. Y'all see this? And that's where price would essentially cross that trend line. Let me make it a different color. Right? That's where price will cross. So I probably would get in right there. I probably would put a sell limit right there. That's me. Because it's already so much past this, already 100%. I'm like, well, shit, it's only a few more pips. If I miss it, then okay, I miss it. But I'm like, I don't like the drawdown. I don't like the drawdown. So I'm going to try to catch it at the top as best I can. So I'm going to try to find where this level is, where it would cross this trend line. And this level is like the top of this consolidation. So I would probably put in a sell limit at 32730. So now this thing has closed right here and it's still going up, right? It's still going up. It's still going up. And then it triggers my sell, doesn't it, Judy? It triggers my sell. When it triggers my sell, the rule is if it turns around and comes all the way back up using your fibs, it went past 61, went past 50, went past 38, went past 23, came all the way, it went past where we started from. If it does that, then what you can gauge is that it's going to also drop 100%. Right? So if it came back up to this point, then it will probably take profit at the bottom of this point. Everybody with me? Okay. Now, the other thing about that is let's say we do a clone again, right? Because you stack the fibs on top of each other. So now I've cloned this. And now I'm going to take this 0 and I'm going to put this 0 right on top of this 1. Right? 100%. So it came down, it went all the way back up. I'm going to stack my fibs and it came all the way back down. Y'all see? To this. Boom. Perfect exit. Perfect exit. Take profit. Right?
Is that, Tracy?
Huh?
How many pips is that?
Oh, from up here to down there? Let's see. So let's say I would, because I'm scary, I would have got in more right here. 300 pips. Because we understand fib magic now. Right? We don't have to guess. At least you would have a reason why your take profit is down here. You would have a reason because you've stacked your fibs, right? So if you're on a downtrend and you want to look for the retracement, you're looking for it to come up, right? You're looking for it to come up so that you can sail down. And when you stack the fib, wherever you get in up here on the fib, you get out down here on the fib. If I get in on 38.2, it turns around, I'm going to get out at 38.2. If I get in at 50, I'm going to turn around and get out at 50. If I get in at 61.8, I'm going to get out at 61.8. If price comes all the way back to where I started from, that's 100% retracement. Y'all understand that? The Fibonacci is nothing but percentages, right? From here to here, 50% is the halfway point, right? 38 is 38% of the distance. 61.8% of the distance. 78.6% of the distance, right? 100%. Hey, no, sit down. 100% of the distance. So if it comes back 100% of the distance, and I draw my stay. Come on, no, please stop. If I come up 100% of the distance, when I duplicate my fib, I'm gonna come back 100% of the distance. Y'all understand?
Yep, this helps a lot because I was in this buy yesterday. So when you look at the last two long red candles, the most current two long red candles, right before those red candles, I was in the buy. And I was like, I know there's a way for me to draw this, but I don't know, not yet.
Well, why were you in a buy?
Because of those green candles. But I thought my zone.
Wait a minute, go back. The green candles, those are the buy. So how are you in the buy because of the green candles?
I was in the buy because my zone was in that area where the green candles are. So I thought the buy had started for it to go back up, meaning like it's gone through the demand zone where the red candle is. And I thought that the green candle at the bottom was the indication, okay, it's now gonna go pass through this zone. Once it goes through the zone, then go up in a buy. So I guess I was not patient enough, because I thought I was okay with getting in the buy. I was able to hold it and then recover with what happened today. But if I knew better what I know now, in drawing the fibs twice, like you did one on top of the other, I would have seen how much further down it was actually going to go, and then go up. So I was in hold mode with that one.
Well, also keep in mind, don't forget all this stuff plays together. So this is a downtrend. What kind of opportunities are you looking for in a downtrend?
So
you guys see what I'm saying? So this is what we're talking about. This is a short-lived buy, right? It's a short-lived buy with a hell of a sell. Right? The sales are always going to be more dominant because it's a downtrend.
Right.
So you don't want to go, the trend is my friend. You don't really want to go against it unless you can identify something spectacular about, I'm going to go from here to here. You see what I'm saying? Otherwise, you need not be in a buy anyway.
Agreed.
Which means you should have been waiting for the pullback, which meant that you see this big Josiah, please go in your room with that. Mommy can't hear. In your room. Okay. If anything, you see this big candle coming down, blowing through your demand zone. What should you do?
I should see where the 50% of the candle is. Should have. I will now. And then I then can identify exactly where the retracement will go to, and then put in my sell limit for that 50% area of that candle.
There you go.
Yeah.
Right. I mean, even from the standpoint of, let me take this out the way. Let me just test this out. Okay. Let me see if this even makes any sense. I'm getting ready to say, I believe it does. But this right here this green candle is a swing high. You see that? It's a swing high. And then this candle, when you saw that happening, 1, 2, you know that was a swing low. Now, like you said, now with hindsight now, right? So now what you could do, let's see if this works. You take this and you take this. Oh, I need to reverse this, don't I? Because this thing is backwards. Hold on. There. Right? And it comes back up. It didn't even come up to the 38.2. So the thing is, you shouldn't be in the sale no way.
You mean in the buy no way.
Well, you shouldn't have been in the buy regardless.
Right.
But I'm saying you wouldn't be in this sale either. Like even if you took that swing and you wanted to come into 38, 50, 61.8 territory, it needs to come into there for you to have a solid sale.
Correct. I
right?
agree.
So we didn't have that from that standpoint. So like how this kept dropping. When do I get in? When do I get in? When do I get in? Well, you don't until at least this 50%.
Right. That's clear.
Okay. Everybody see that? Everybody see what we're talking about? It's recorded. Okay. Go back.
My question, I'm sorry, is that first fib, why we didn't put a sell limit on the 61.850 and the 38.2?
You could have. You could have. But my point is price already passed those points. Willie, this candle has to close first. This candle, you don't know this is a swing low, Willie, until this candle and this candle closes. You have to have two candles close.
I got that. Well, my question is, okay, we drew the fibs from the swing high to the swing low. Now we have the position, 61.8, 0.50, and 38.2. Now you said we could put a sell limit at those marks, right?
Stop,
and I'm straight right there. But my problem is we lost that trade if we'd have did that.
Willie, the fibs would not have been drawn yet.
Okay.
The fibs would not have been drawn yet, Willie, because I don't even know that this is my low yet. I don't know this is my low until this candle and this candle close. Do you understand what I'm saying? You got to get me there, baby.
So we only drew fib.
Hold on, Willie. Hold on one second. Josiah, please. No, because you're too busy. You will not. So I'm gonna let you sit here. The minute you start reaching for stuff on my desk, you're getting down. Do you understand? Yes. Okay.
So we draw the fibs from the. We only worry about fibs when it has a swing high, 2 candles to the left, 2 candles to the right, and a swing low, 2 candles to the left, 2 candles to the right.
Correct.
I don't worry about it if what messed me up is once you draw the fibs from the high to the low, that's it. Like then those magic numbers take place. But
I don't draw that until after I know the low.
Got you. Okay.
The low, I can't draw fibs until I find the low. And the low is not confirmed until I got the 2 candles to the left and the 2 candles to the right. In this particular case, the 2 candles to the left and the 2 candles to the right would have already surpassed those points. I wouldn't even be in this trade at all because I needed to confirm this was the low. And I didn't confirm this was the low until this candle and this candle closed. Then when I drew the fibs at that point, Willie, when I drew the fibs at that point, I could see that this candle already passed my zone. Okay. So why would I be getting in here? The price is up here.
So I'm looking at current price right now. We have she had a big engulfing candle, and then we have it going up.
Right.
So if I wanted to, this is one leg of you could say a swing high, because it has 2 candles to the left that's lower at the current price right now.
Correct.
But I can't draw fibs right now.
No, because you don't have 2 candles to the right that confirm that where price is indeed the highest point. The next candle could form and go up.
Okay. All right.
If the next candle forms and goes up, that's not the high right now.
Thank you.
right? You with me?
Yeah, that's what I was lost at. Like, I mean, you look at other people, you know, doing videos, and they just pull up a fibs. Yeah, draw your fibs, and they'll pick up a point that's low. I know swing low, swing high. I know low high. I didn't understand swing low and swing high.
Right.
So I'm thinking of from the low to the high or high to the low, and within those 61.8, 50, those are the good marks. But that's not true. I need to have 2 candles to the left, 2 candles to the right from both points, high and low.
Correct.
Okay.
That's how you confirm it. Because if this next candle forms and goes up into this blue line, well, now that cancels out this, which would mean that my fibs would then change, right? I would be changing my fibs every 4 hours because I don't want to just wait until the swing high has confirmed itself by having 2 more candles drop below it.
And that's how you change your fibs. Once another swing high, swing low happen, then you can readjust your fibs.
There you go. And you can keep doing that process because now you want to, okay, well, that swing low, that swing high, how far is it going to retrace? Boom, I get in. Okay, great. I'm going to ride it. Now that you in, you might want to get another position, right? Well, how do I figure out where the next position to get? I want to stack another position on top of this. How do I know where to get in a third time? Well, I wait for the next swing low, swing high to form, find my retracement, put in another stack position.
And the key on that is wait.
Yes, sir. Because you have to confirm the high and the low. And just because it's down here doesn't mean it's the low. The low is the one that has the 2 candles to the left or to the right higher. That's why this little exercise of you take your finger and is your pinky and your ring finger are higher than your middle finger, right? Your index finger and your thumb are higher than your middle finger going downward. So that's the swing low. You need 2 this way and 2 that way to identify the swing low. This way, I need 2 going down and 2 going down to be the swing high.
Use your hand. Okay.
If you forget, right? If you need a reference point, that's how you remember. How do I know if it's the high? Okay, I need 2 to the left, 2 to the right. How do I know if it's the low? I need 2 to the left, 2 to the right. If you have 1 to the right and 2 to the left, that doesn't mean anything because that very next that third candle can come down and take out your low. You guys understand what I'm saying? It could do that. So you have to wait. That's what we're calling confirmations. You have to confirm certain things before you just start betting your money on this market that's moving.
Yeah, and something that I figured out how to do, like the replay, Tracy, like how do you go back and actually delete what's past. I saw Oren do it, and I said I got to figure out how to do that so I can move the market and see what it's doing. So like on that replay option that's on Trading View.
Yeah.
If you click that.
See, yeah.
Yeah, and then if you bring that to the point of where, like, say that area right there where that big bullish candle is.
Yeah.
To the right. Go down. No, go down. Go down. Now bring it over where you were just showing us. Right there. Come back. I'm sorry. Go back a little bit to the left.
Where you want me to go? To where?
Go where the first Fibonacci you drew.
Over here?
Yeah, go to the right. Keep going to the right. To the right side of that bullish candle. To the right, not that one. Go back a little bit. Just click when you get to the right side of that bullish candle.
Which bullish candle, Gary? This bullish candle?
That one, yeah. Click it. Just click.
Okay.
Now.
Right.
See the arrows at the top on your speed?
Yeah, so then you want me to go forward.
Yeah. So Willie, what you're seeing basically.
Oh, okay, I see. Yeah. Yes. Okay, that's a good way to describe it. Go ahead. Talk it through and I'll do it as we go.
Okay, so basically, Willie, like this is where the market is right now, right? So Tracy's talking about to get the swing low. How do we verify that? Well, we don't have any candles to the right of that candle, right? We've got 2 to the left, but we don't have 2 to the right, right? So go ahead and click once, Tracy, going forward. Click again. Okay, there's the second candle. So basically, those 2 candles got to form first before you draw up the Fibonacci, because you got to have 2 to the right, 2 to the left. So I think that might have been what you was looking at. When you look at it, you gotta, sometimes we all work different ways. So when you look at it, it's like, okay, what did it look like before those candles even came up, right? So I think what was throwing Willie off, he was thinking that, okay, like you said, Willie, I understood it more when Tracy explained it, as far as 2 candles on the left, 2 candles on the right, right? Because I would see traders just going and just drawing their Fibonacci's up, and I'm like, okay, well, why did they draw right there? But I listened to Christopher Terry when he talks about drawing Fibonacci, just kind of learn a little bit more about Fibonacci. But I just wanted to share that, Tracy.
No, that was a great point, because I didn't even think about doing the replay of it, right? Because at the time, these candles aren't even there. They're not there. So if they're not there, I don't know if this is the low or not, right? I don't know it's the low until, okay, that candle forms, but this candle could have came down this way, right? Then that wouldn't be the low anymore. Now this would potentially be the low. And then I would need 2 more candles again, right? So thank you, Gary, for that. I appreciate you. See, so now it's coming on down. So then I will put 50% right here, right? 50%. I missed the 50% because it kept going, continuation. But then 50% right here, right, Sheila? Then boom, what happened? It dropped.
Yes.
It's moving. You stop moving. It was moving. Okay. So the whole point I wanted to make is that you find the swing high, you find the swing low, you put the fibs, you're looking for this area in there, okay? That's where you would want to put it. In this case, the 2 candles were already formed when we drew it, which meant we wouldn't have been in it. But that's how we knew it was going back 100%, right? Because it was back to where we started from. So since it's that far up, when I clone my fib and put it down here, like, okay, great. Then I'm going to get in up here and I'm going to get out down here. 100%, 100%. Wherever you get in up here is where you get out down there. That's the point I want to make.
Yes, I got your point.
Does everybody have my point? If Willie got my point, I know we good.
I'm good. I'm mad I didn't sign up underneath you.
Well, you would have been mad a year ago because I didn't know it a year ago. I mean, it just takes time. You just got to stick with it. You know what I'm saying? You got to stick with it. So I'm going to stop sharing the screen and we go from there. So how's everybody doing? That's what I wanted to make sure we went over tonight. So you know how to draw your chart. You know what to look for. You know how to get in, first bounce, second bounce. You know it's going to have 3 to 4 bounces before it breaks through. If you miss your bounce, you got to wait for the what?
Retest in zone.
The pullback. Right? You got to wait for the pullback. But then we got to figure out how far is it going to pull back? How do I know when to get in on the pullback and where a pullback is going to happen? Draw the swing high and the swing low. Get to your 31, your 50, your 38, your 61, and your 50, that zone, and that's what your ideal position. It can go outside of that, but your ideal position is in there. When it gets in there, you're gonna then do when you get that little zone done. Now you're gonna copy your fibs. If it's in a sell, you're gonna stack your fibs below. If it's in a buy, you're gonna stack your fibs above. And you get in at the 61.8, you get out at the 61.8. You get in at the 38.2 on the sale, you get out down at the 38.2 on the sale. It's gonna be scary because the price not gonna be there. It's easy to look at it when it's already done. But the point that I wanna make is that if you go back and you practice and back test this, you will start to see that it occurs way more time than it doesn't. Which means that now when you go into the abyss, i.e. the current price, and you don't know what the hell get ready to happen in that black hole over there, you have confidence that what has already happened over the past 100 years is getting ready to happen again for you. Okay? It's going to happen again for you. And that's what I want everybody to focus on, those 3 things. Drawing your chart, knowing how to get in on your first 2 points, high probability. If you miss those, or you miss your 50% on the big candle, then you got to wait for the pullback. That's if you follow Stevenson, that's all he talk about is wait. He said, wait for the flag, wait for the flag, wait for the flag. What's the flag? The pullback. It's the same thing. And I could never figure out, well, how does he know how far that thing gonna go? How do we know? Boom. Now this is a reference point of how we know. That's it. It's just a reference point to give you a better parameter to work with. Everybody good? Okay. So what we're gonna do is assignment for tonight is I want everybody to practice drawing that up. Right? Back testing it, drawing it up. All right. And stacking your fibs and saying, here's where I would have gotten in this zone, right? 38, 61, and 50. I would have gotten in this zone. Why is that the swing high and swing low? Show me. These are the 2 to the left, 2 to the right on the high, and 2 to the left, to the right on the low. Right? Show it with like a little yellow circle or something like that. Then draw the fibs, stack them up, and show me where you would have got in, and show me where ideally you could have got out. If y'all can do that, if we could all just do that and not worry about all the other noise, and you just put your blinders on and just looked at your own charts and did that, or if you had charts marked up and somebody calls a trade and you could look at that trade, you should be able to identify whether you need to be getting in, because you don't get in unless it's if it's not a retest, you don't get in. The swing high, swing low strategy is a retest. Y'all realize that? It's a retest of a particular zone. So it's no retest, no entry on all of it. It's still, whether it's a bounce, whether it's a pullback, it's no retest, no entry. Don't go chasing waterfalls.
Yes.
You know what I'm saying?
I have a question, Tracy, where you were sharing how you do enter a bigger lot size when you're putting in your buy limit or sell limit, and us being comfortable with whatever the pullback might be. I just wanted to ask, did it just require you experiencing it a few times to get a little bit more confident and put in the bigger lot size?
No, because I'm still not all that confident. I just put 0.01s on all of them.
Okay.
Because I don't know which one is going to hit really. Right now, I do start using my my previous structure, right, and seeing where support resistance is and stuff like that. But I just still practice with 0.01 just so I can see and get in the habit of placing the trades in real money. You know what I'm saying? And not being afraid to do it, because I believe it's gonna hit one of them. You know what I'm saying? But if there's any drawdown in one of them, I don't want it to take me out. You know, so I just put 0.01 and I just see, and that's kind of how I practice it, and just let it go from there.
Okay.
So worst case scenario, it hits all three of them and I got a 30-cent trade going. You know what I'm saying? So
that was interesting, Tracy. Yesterday I was on GPU USD and I did my own. I didn't look at anybody else. I did my own. Yeah. I'm a big girl now. I can do this.
That's right, Judy.
So I did on my own, and I'm just looking at this now, listening to you, and I got $1.40, $5.12, $4.34, 12 cents, $2.25, 34 cents. And then I stuck my nose into one of the traders, and he said, this is a really good buy here on another one. Here's just get in here, get out here, put that. And I went, oh, what the hell, I'll get a little bit extra. I put his trade in, I lost $8.44. And I went, you guys are not playing on my screen anymore. I'm doing my own.
Yeah.
You know, you just don't know. I mean, they're fantastic, I know. But I think what you're doing has given me the confidence to own my own stuff. And okay, no, this is no, look, I did all that and it worked. What am I listening to that for? And going back to the naked chart, I think, and understanding. And the swing high and the swing low, I didn't get that, so I got that. That was great. Thank you.
You got it.
So the fibs aren't coming out until I can see a swing high and a swing low. You're not even checking in. You're not even sticking your nose in. If you don't have the 2 candles each side, no fibs. Awesome. Thanks, Tracy.
You got it, Miss Judy. You got it. Awesome. So proud of you, Judy. Got to put your side to sleep.
Cassandra.
Yes, ma'am. How are you?
I am more than marvelous. How are you?
Excellent.
Good. So I was in 2 trades last week. I was up like $1,500. And had I had all of these strategies now, I would have known where to get out. So I was up like 15. I was swinging. It was going back and forth. And it went back, and I was like $500 in profit. And then I said, okay, I don't know where it's going to go. I'm going to get out. But so I looked, and I chose EUR-NZD as the one that I was going to mark up. And I looked back at it kind of like what you did. And I look and see that it's continuing to drop. And I'm like, ugh, I could have just stayed in it. So now I know I have the tools that I can use to see where it's going to go, supply and demand, and all these different things. So I really just wanted to say I appreciate you.
Oh, yay. I'm just glad it's working. Like, I know this stuff can work. Like, I know it. Tino, no. Look, we know it can work. We just had to, it took us a year to kind of get around to the point where we could identify the basics ourselves and then be able to explain it, and the people that don't stick around long enough, guarantee you're not going to get it, right? You guarantee. But I've lost a lot of money playing around, trying to get, I'm not only playing around, but learning, you know what I'm saying? Learning. But that's the way this game goes, and so I'm just grateful that, we all believe in the skill and that we have such amazing educators that do teach it, but they don't have 4 and 5 hours every single session. They got an hour. You know what I'm saying? So look how long, we've been on here for 3 hours.
Wow. Yeah.
Just on that one thing. We did do some chart and stuff at the beginning, but we've been on 3 hours. And look and it wasn't me. Imagine if you had the whole company or a good portion of the company on in a chat while I'm trying to do this. I can't keep staying with Willie and on Willie and on Willie and making sure I got 600 more people to tend to, right? So Willie kind of get lost in the shuffle in that case. You see what I'm saying? So we break it down now. Okay, we can have a little bit of individualized attention and try to make sure, because it's people like that all around IML, all over IML, that if they just had a little bit more understanding, they could get it, So that's really my goal, is just to make sure as many of us can get it as we can, because I just believe that's going to be the power of growing the company from this point. The company grew how it grew from really 2016 till now, right? With the new wave, 2016 to now, that's 2 years. Okay, great. But now this next wave, I personally don't believe is going to come from excitement about what could happen. It's going to come from a lot of us that's already been here now being able to show that next group. The first wave, it was all the people in the first place. So nobody knew. So everybody's excited to learn it. So great. It's sheer excitement. But 2 years later, it's not sheer excitement. 2 years later, we need to know something. Now we've got to take that, and now we can replicate that on the new people and really have them tap in and be able to support them and help support the educators, because they need us too. The educators need us too. The more we can learn from them, if Oren doesn't do what Oren does, we don't have this. Right? If I don't sit there and watch him and talk to him and do that, if I don't do that, so he's teaching it. It's not like he didn't teach this. He is teaching it, but we're just breaking it down a different way because I'm new. I understand what new is thinking, right? So I'm saying it to new, fresh eyes, whereas maybe a educator is trying to say it, but in an hour to 700 people without not getting nothing covered. So I appreciate y'all. Hold on, let me go ahead and stop this recording. So everybody has this. You got the assignment, right? You're gonna go back. You're gonna do your chart. You're gonna do your fib. You're gonna find your swing high, find your swing low. It's got to be 2 candles, and then you're gonna do your fibs. You're gonna stack, and you're gonna look for your zone area, and you're gonna get out at that same point. All right.
I have a question, Tracy.
All right, go for it.
Stacking fibs. Can we only do that in TradingView?
I do it on my phone in MT4, but it's a little bit harder.
Okay, I guess I better learn TradingView.
Yeah, I don't do MT4 on my computer because I have a Mac, right? This is a desktop Mac, and then I have a MacBook. So I don't use the MT4. I use TradingView on those two computers, and on my phone I got MT4. And it's not really a copy on the phone. It's just to get another one and measure it the same distance as the first one and then move it. It's not like a copy feature. So you can still do it, but yeah, I would just, in that case, I don't know how to do it on on MT4 as far as the features, because I don't really use it.
Or you could do TradingView on your phone, right? Where
You can do TradingView on the phone too, yeah.
You can do everything and stack it up. It's a lot. I use TradingView on my phone better than the MT4 on my phone because it's a lot easier, not user friendly to me to do that.
And and so like little things like that you guys are talking about, those are like little tutorials you could do for people. You know what I'm saying? That's stuff that people need to know. Like, okay, I don't have MT4. I don't really use TradingView because I use MT4. Okay, well, Taisha, you figure out how to replicate what we did in TradingView on MT4 and then do a little tutorial video on that for people with MT4. You see what I'm saying? Now you add more value to the marketplace on something like that, where that's probably stopping a lot of people because they trying to figure out what tool to use and what bar to pull and what symbol and all that stuff. Comprende? All right.